It is Friday. It's that time of day. We talk about real estate before everyone gets ready for the weekend. It's that Friday. We're gonna dive into some stuff today because we've been talking about. I feel like we've been talking about this a lot the last couple weeks. Just kind of like how the market is. It feels split. It feels like there's some kind of no one knows which direction it's going. And so we're going to dive into an article that I found about where kind of how it actually is split. The market is split. And so we've got some things that are going on in the market. We're going to talk about all that, as well as kind of Zillow has revised their forecast. We're going to dive into that as well. And then the government shutdown, it's happening and it has been happening, and kind of what is going on with that. We're going to dive into that a little bit as well. But before we get started, I want to make sure anybody watching, let us know where you're watching from, because I like to know, are we talking to people local or not? It's that's always helpful. And to join me in this lovely this conversation, I am bringing my friend in, Matt. Matt, how you doing?
Happy Friday, everybody.
Happy Friday. I know. So make sure you let us know where you're watching from. And as we start talking, make sure you post your comments in the chat, because we will answer those. That's what we're here for as well, to talk about what's going on, but then more importantly, answer questions that you might have. So let us know any questions that you have, because this market's bananas. And when I say bananas, people go, oh my gosh, so the market's moving as fast and everyone's getting multiple offers and all of that. No, it's not that. I feel like there are two different markets is what I feel like right now. There's a market for those homes that are really good. They've been maintained, they've been updated, everything's great about them, and those homes go really fast. So there's that market, and then there's that other market for the homes that kind of need some updating. There's some deferred maintenance, and what's happening with them. There's some price reductions, and then there's that market.
And location. I mean,
agreed.
So important right now.
Yeah. And not just like in Arizona, like across the United States. Like again, we've talked about this before, where real estate is very hyper local, but it's really, I think through COVID, right? The entire United States was crazy. And so I think people forget that as we move into a more normal market, which is what we're in now, we do get into very specific, like some states, and then even within some states, like some cities or counties or whatever it is, those places can be really, really hot. And other places can be a little cooler, a little bit, more mild as far as how active it is.
Yeah. And then we're going to talk about the migration piece as well, which is really, really fascinating. If you think about how hammered we were with migration during the pandemic and what's going on now, what are the new trends in terms of where are people moving and are they moving?
Right. Which is, it's very interesting. So with that, let's dive into this article, because it is very interesting. So this one is The Great Stay, Why the U.S. Housing Market is Divided in Two. So it says, I recently let me go back up here. I'll tell you guys who this was. This was written by Mike Simonson, who used to do Altos Market. I can't remember what it's called. Altos
Research.
Altos Research. Thank you. Altos Research. He's joined Compass now, but Altos Research, it says right there. So he's very smart and he tracks the market daily. So good information, a lot of really great information. So it says, I recently gave a talk to a few hundred real estate professionals in Chicago. I started with this map below of the U.S. showing the days on market for pending home sales in different states. It's a stark illustration that the country is divided into two distinct real estate markets. So all of these, I'm stopping now as far as the reading. So all these blue areas, no, we're not talking political. Okay, let's just get that out of the way. Right. These are just showing you days on market. So like 56, let's see, 73, 59. I mean, I've got some friends over here. Connecticut 48, New Jersey 64, Virginia 57, and then we move into Florida 107, Mississippi 104, Texas 97, Arizona 89, California 73, 82 in Oregon. So very different. Alaska 53 or 56. Sorry. So the states with the shortest time to sell a home are crowded in the Midwest and the Northeast. Across the Sun Belt, homes are taking roughly twice as long to sell. 50 days in the Midwest compared to 100 days commonly for markets in the South. What's going on? The shorter answer is that we used to move from north to south, and for the time being, we've stopped moving. I've called this phenomenon the Great Stay. In the post-pandemic economy, we're staying in town, in state, in our jobs, in our homes. Companies are not firing and they're not hiring. Workers are not quitting. Growing families are not upsizing. Workers are not migrating across the country in search of better opportunities. For many years, Americans have been moving from north to south, from the Rust Belt to the Sun Belt. That migration pattern exploded during the pandemic. Remote work, cheap new housing, and other economic opportunities drew millions of people to states like Texas, Florida, Arizona, and Colorado. For anyone who had been thinking about making the move, suddenly during the pandemic, it was an optimal time to do so. Then suddenly, the move got expensive. The price of homes in the South shot up. In cities like Tampa, it was quite common to see 45% home price appreciation in just a few years. Mortgages got expensive too. When mortgage rates jumped from 2.8% to 7%, payments rose even further. But it's not just the cost of houses. Insurance rates in much of the country spiked with increased natural disasters and rising replacement costs. Taxes jumped. Home goods like washing machines got more expensive. The holding costs of a home in many southern states increased sharply. The Midwest and Northeast aren't nearly as susceptible to natural disasters, and insurance costs have held more steady. As the relative affordability benefits of moving to the South evaporated, we stopped moving. A young family in Cleveland used to buy a house from the retirees who moved to Sarasota. Those retirees aren't selling, but the young family still needs to buy. Inventory is tight in Cleveland and high in Sarasota as a result. The Great Stay is not just a housing story. The weak housing market is intertwined with a very unusual labor market. While the unemployment rate is reasonably low, the hiring rate by companies is as sluggish as it would normally be in a deep recession. The country added only 22,000 jobs in August. Because no one is hiring, those who have good jobs don't want to quit. The rate at which employed workers quit their jobs is remarkably low and looks more like a recession than an economy growing at 3% plus. Notably, the quits rate is lower in the northeast, which is also where the days on market illustrated in our map above is the lowest. Before the Great Stay, I'd be confident to quit my job in Chicago to move to Phoenix to get a new job. Now they're not hiring. I'm not quitting, and therefore I'm not moving. I'll stay. Thank you very much. This weirdly slow job market is perhaps the result of big pandemic levels hiring. Many companies are fully staffed, and while layoffs are dominant, hiring is also unnecessary. We're also in the early stages of AI impact in the economy. While it's hard to tease out AI-specific impact on hiring in concrete data, anecdotally, it sure seems common. The Great Stay means we're not selling homes in the North and not buying in the South. Inventory and days on market are climbing much more quickly in the South. This North-South divide also shows up in new construction data. We've been building homes in the South much faster than the North. It's no surprise that inventory piles up where we have all this new construction. The days on market map is perhaps the most clear illustration of the phenomenon. The Tampa metro market, for example, is up 94 days on market for single family homes, up from just 20 days in September of 2021. Condos in Tampa are up to 122 days. Homes in Connecticut, on the other hand, are taking only 48 days on average in September, up from 35 during the pandemic. The Great Stay is a recent phenomenon, and the housing market emerged from the pandemic boom times. Different markets slowed at different paces. I built this animation to illustrate the regional, and this was really, I'll just leave this up here while I'm talking, or while we're talking. I feel like this is a little bit like kind of like that golden handcuffs thing. This little moving thing is it's pretty crazy to watch the days on market just like start shuffling. But we kept kind of saying that locked-in effect. So this is similar to that locked-in effect, right? Like people just aren't moving the way that they used to move. They're not going where they used to go. when they would retire, they would move, or even when they got closer to retirement, or these young families that would get a job in one location, would then get a better job someplace else, and then they would pick their family up and they would move, and that stuff is just not happening the same.
Yeah, well, there's a lot to digest.
I know.
Sure.
So Boldly Go says, I'm watching the price of gold and silver skyrocket. That's an indication that the buying power of the dollar is rapidly diminishing. Thanks for irresponsible politicians creating dollars. Oh, creating dollars, sorry, out of thin air, then spending it like drunken sailors. They're the reason young families can't afford a home. Heck, a new Ford pickup is almost as much as a home. Well, we talked about that a while ago, about what the average person is paying for a car payment. And it's high.
It's insane. The number of people with that have a car payment over $1,000 is at record highs. It's not even close.
What would be interesting to know is, like, if you have a car payment of $1,000 or more, do you own a house?
Yeah, good question.
Because is that replacing their house payment?
Yeah, going back to days on market, one of the most interesting things to me is when you look at the Northeast, because if you look at like New Jersey, Massachusetts, places where it's not as easy to close a real estate transaction, right? Because they're attorneys, they are judicial states, right? Where things just don't tend to move as fast. So the fact that they're even in the ballpark of that 45-day close, which is probably normal for like a New Jersey or a Massachusetts transaction anyway, really tells me that there is truly a lack of inventory.
Yeah.
I don't know about the move to Chicago to here, because I think everything that Tina Crawford shows us is our jobs numbers have to be in the top 20% of the country.
I agree with you.
Our unemployment's low. Our hiring is significantly high. Our economic development has done an unreal job of bringing in so many multi-billion-dollar projects. I don't really not believe that that our hiring rate, and for Arizona in particular, is still not extremely strong.
Well, I mean, it is. I can tell you from the people that I'm helping move here, and they're moving here for jobs.
Yeah, and I realize that there were a lot of people that probably moved here when we could work remote, and maybe some of that's gone away. So that's taken away some of the potential migration, right? From people that, hey, I can work anywhere. Let's move to Phoenix.
Right.
But I don't know. It is interesting to see that it is expensive to move a family, right? So there are some people that are kind of just saying, hey, we're just gonna have to stick it out, the colder weather or whatever, because it was like New York to Florida, Washington, Oregon, California, to Arizona. That was super common.
Well, I mean, our feeder markets have always been Chicago, the Midwest, Minnesota-ish area, Oregon, Washington, Colorado, and some of California. And then we would. What's that?
Yeah, California's like 37% or something crazy like that.
Yeah, I mean, it's always been how it is. And I mean, the people that I have moving here, most of the time they're moving here because either they're being relocated here for a job specifically, or they're moving because wherever it is that they live, they are tired of dealing with taxes or, things that are just way more expensive where they are. 100%. And they're looking. Yeah, they've visited here. They love it here. They're like, look, now's the time for me to just get out. I talked to a woman this morning. They're in Philadelphia, and they said, you know what? We don't have anything tying us here anymore. Our kids are gone. They're not necessarily in Arizona, but coming to Arizona is going to put them in a place where it's going to be easier for them to get to their kids than even staying in Philadelphia.
Yeah, no, that makes total sense. And yeah, and I like our weather more.
I like our weather more too, except for, I mean, we talked, we did this a few Fridays ago, and it was pouring rain, and we are heading in for some more rain.
Yeah, it feels nice outside right now, though.
I know. It's okay outside. It's a little humid for me, but it's going to rain. So, I mean, it's crazy. I mean, what are you seeing, Matt, from the standpoint of the on the lending side for people coming here? Are they coming because of jobs? Are a lot of the people that you're seeing, are they local and just moving around? Like, what are you seeing?
Yeah, I would say it's more of people moving from other states. I think Tina said it best, where our market is lacking, and not just Phoenix, but everywhere, is we have that lack of churn in terms
Mm-hmm.
of people that live in Chandler and they want to buy in Chandler or Gilbert, or they're in Phoenix and they're moving up, move up buyers or move down buyers. It seems to be that more often these purchases are driven by, mandatory life events, right? Like
Mm-hmm.
my prequel I just did today was older her. She just lost her husband. She needs to downsize. So she needs to
Right.
sell, she needs to buy. So that's not really a churn. That's a life
Right.
situation, right? Or a situation where their parents pass away, the kids are selling the house. Like, if it does feel a lot more of those types of transactions, then a lot of people are just waiting, and which we don't really understand, because typically these windows, when you call them quote unquote buyers markets, they
Mm-hmm.
don't stay open for prolonged periods of time historically. So I think a lot of people don't realize, especially right now, it's proven, and Tina had some great charts, tableau charts where she showed it, is that people get their best deals typically in our market in that fourth quarter,
Yeah.
because there's serious sellers, serious buyers, and there really is tremendous opportunity in our market.
There's a that I saw oh gosh, what are they? Bigger Pockets. You know Bigger Pockets. It's a website for like investing, so in real
Oh,
estate. So
okay.
I check on them. He just put out a post. One of the guys from there just put out a post the other day talking about the best week to buy, and it's like
Yeah.
now, which I don't know I can't drill it down to a week. I think Zillow or
You got
Realtor.com are
so
trying to
many
drill it down to a
variables.
week, but I can't drill it down to a
Right.
week. But I tell people the story all the time. When during COVID, I was helping a younger family buy a house, and we were bidding on houses, and we were up against multiple offers. And there were times we got bid out because we were at their ceiling and they couldn't go any higher. And they were getting really, really frustrated. And it was in December. And we found a house. They liked it. We were not up against any other offers. We actually negotiated off the price of the house. And then when it came to inspections, we got some of the stuff inspection wise done as well. And they still love the house, but
That's
that was
awesome.
in December, and that was during
December.
COVID.
Yeah, I would say my best deals I've seen clients get have usually been December closing.
Yeah. Yeah. So, I mean, I keep telling a lot of my buyers that I'm like, you're in the right season right now, because no matter if you're in a buyer's market or a seller's market, the end of the year, the last quarter of the year is always the best time to buy. But sellers don't want to go into the new year with this house kind of hanging over their head that has been sitting on the market for potentially 100 days.
No, yeah, well, in a lot of parts of the country, colder markets, you don't want to be in the market in January because no one's looking at your house.
Right.
You know,
What's a
no one
flip flop for
houses.
us, right? Everybody thinks like, no, everybody says, oh, the summer is the best time to sell. Not here.
No, it's kind of a lot of people out of mind, but and really a lot of people make those buying decisions over the holidays, but they don't obviously take place until January, February, right?
Right. I mean, our season has started to heat up. This was one of the things I'm going to jump over here. Because we were talking about this earlier. Now I'm doing this on the fly because I did not look at the numbers already, but this is the Cromford report, and this is the contract ratio. So the area that has really, really high bar graph, that is during COVID. And what this shows us is how fast the market is moving, and whether we're in a buyer's market or a seller's market. But what I wanted to look at is here during these times, right? Look at the active counts. We had 44 active homes on the market, but we had 10,500 under contract. Same thing. Like here's one of the highest. We had 12,000 homes under contract and 4,100 homes on the market, active on the market. And everybody talks about right now, they're like, oh my gosh, there's more inventory on the market. It's so great. We have more to choose from. And the reason that our market isn't like this, which was this crazy frenzy that we will likely never see again, is because we have more homes on the market and less homes going off of the market. So like right now, we have 21,000 active homes on the market, and we have 6,800 under contract. So although they don't totally correlate, I mean, this definitely is less. It's not that far off. It's just a matter of the homes just are not coming off of the market as fast as they were here.
Right.
So it's just, it's interesting because everyone thought, well, during COVID and during these times, we didn't have a lot of homes for sale. We actually did. They just were coming on the market and going right back off the market really, really fast.
Yeah, those are really interesting numbers. I mean, we could definitely stand more listings for sure.
Agreed.
What, fifth largest city? What are we now? We're Dallas. I know we're always back and forth.
As far as which one?
As far as listings, like Phoenix being, one of the largest cities. I mean, I think we're right there with Dallas. But I mean, even we could have 25,000 listings and be fine.
Right. Well, I mean, this is saying that our active count as of week 39 is 21. When I look on MLS right now, we're at 25. So I think this is a couple weeks off because this is the end of September. Yeah, that's the end of September. So we're at about 25,000 right now on the market active. But I got to tell you, it doesn't feel like it because with my buyers, I'm out there, we're looking and we don't feel like we have a lot to look at.
Yeah. Well, I think it just depends. It obviously depends on your price point, right? In your area. So like, if you're looking, places that are fully built out, like you're looking in North Scottsdale, you're looking in, we're talking about midtown Scottsdale, whatever. Like you're not quite far north, but you're not quite south at the McCormick Ranch, all those areas. I mean, there's nothing new going in, and will be nothing except for like, a couple little things here, like they had the Ritz, right? A few things here and there, but for the most part,
the Ritz, if you want to drop a cool $4 million.
Yeah, and then the $3,000 a month for your butler service and free fresh white towels at the That place does look very nice, but hard pass.
I know. Well, I mean, and that's the thing. Like you go into McCormick Ranch. So I've got some clients that are looking at McCormick Ranch, and it's hard to find stuff, and it's hard to find stuff that is that doesn't need a bunch of work.
Sure, and these houses are typically like 1970s,
50s, sometimes 50s.
Yeah.
Well, McCormick Ranch more like 70s, 80s, but there's some in South Scottsdale that border on that McCormick Ranch area that are in the 50s.
Oh, for sure. Yeah, those Hallcraft, most of South Scottsdale were built like 57, 58, 59.
Yeah.
They are made very well.
They are.
Not energy efficient necessarily, but
with your single pane windows.
Correct. Yeah, the single pane windows not super, but great swamp coolers.
Right.
I think that I think I would get sick when I would try to use my swamp cooler. It was like worked out well. Saves you some money though.
Well, I know. I don't know that does it work that well here? I mean, I guess before we had central air, it probably was the best thing ever.
Yeah.
But it puts moisture in the air.
Right. It does.
And I can't imagine during the monsoon that it works very well.
No, 100%.
Yeah.
100% no.
Yeah. So let's look at the what Zillow revised its home price forecast for over 400 markets. Now, Zillow I feel like they were always pretty crazy with what they felt like the market was going to do forecast wise. And then they were staying, it was going to keep appreciating. Then it kind of changed. And then they kept saying like, no, it's going to not depreciate, but they had changed their appreciation numbers for a while. And now they've changed again. So, and this is by Lance Lambert. So Lance Lambert used to write for Fortune magazine, but then he started his own his own thing called Resi Club. He's a smart guy. So it says Zillow economists just published their updated 12-month forecast projecting that the U.S. home prices, as measured by the Zillow Home Value Index, will rise 1.2% between August of 2025 and August of 2026. Heading into the 2025, Zillow's 12-month forecast for the U.S. home prices was was positive 2.6%. However, many housing markets across the country softened faster than expected, prompting Zillow to issue several downward revisions. By April, Zillow had cut its 12-month national home price outlook to negative 1.7. However, in recent months, Zillow has stopped issuing downward revisions. In August, Zillow revised its 12-month outlook to a positive 0.4%, and it's now revising that outlook to 1.2% in the positive. Sellers took a step back from the housing market in August in response to the slow demand from cash-strapped home shoppers. Buyers still in the market have plenty of opportunity, especially in inventory-rich environments, but competitive momentum that has been swinging fast in buyers' favor in recent months is showing signs of stopping nationwide. While Zillow's national home price forecast is no longer negative, it isn't exactly bullish either. High housing costs continue to sideline prospective buyers, making it easier for those still in the hunt. Zillow's market heat index shows the market is balanced between the buyers and sellers nationwide, with less competition among buyers than in any August since 2018. Homes are lingering longer before finding a buyer as well. The median time on market for a sold home is 27 days, a full week longer than last year and 1 day longer than the pre-pandemic norms. I just have to say this, 27 days is like nothing. Nothing. I mean, I remember markets that were like a normal market and your average days on market. And I mean, I think that's kind of where we are right now in the Phoenix market. I remember average is like 80 to 90 days.
Yeah.
And I feel like that's kind of where we are now, except for those rare homes that like hit the market and go right back off.
Yeah. I mean, if you have a market, if you have 3 months of inventory, that's considered stable. Like 90 days that's not a crazy number.
Yeah. I just think that's funny. 20 some days. Oops. So, okay. Among the 300 largest U.S. metro areas housing markets, Zillow expects the biggest home price increases between August 2025 and August 2026 to occur in these 15 metro areas. So some New Jersey, Connecticut, Pennsylvania, Illinois, New York, New Hampshire, a lot of the areas where we were just talking, right? Yeah. From that other chart. So among the 300 largest U.S. metro areas housing market, Zillow expects the biggest home price decline between August 2025 and 2026 to occur in these 15 metros. LA. Oh, sorry. Louisiana,
the other LA.
Lord, sorry. Texas, Louisiana, lots of Louisiana, lots of Texas, California. Lots of Texas. What's that?
Austin.
I know. I mean, Austin was booming. But here's my question though, with Austin, I'm thinking that this Austin is encompassing kind of like us, right? They say Phoenix and it's encompassing all of our Phoenix metro area because there's a lot of small little towns around Austin like we have.
True. In Texas, you can drive obviously for a very long time.
Yeah, very long time. So it says U.S. home prices as measured by the Zillow Home Value Index are currently down 0.01%. year over year. If Zillow's latest 12-month outlook, positive 1.2%, comes to fruition, it would represent a tiny acceleration. So here is, this is interesting. So it's saying that Phoenix Mesa Chandler, year over year change is a negative 3.6%. Again, I'm always cautious with this. One, because I don't think that Zillow's information is completely accurate.
That is not accurate.
No, I don't. I'll read Zillow and I'll kind of take it in just a little bit, but yeah.
I mean, I can literally speak from experience on people that are looking to refinance in some of the areas that have been very flat. Like I'll give you two in particular. That lower price point and Surprise around that 450 purchase part. And another one in that 450 to 500, like in Eastmark, which is a huge development in Mesa. People that have bought a house in the last, 12 months, 16 months, even those guys, I would say they're maybe down 1.5%.
Yeah.
Something like that. it's not a significant number.
Yeah. So Jim, hi Jim, by the way, says Zillow doesn't know what they're talking about. Monroe, Louisiana is next to a massive meta DC build, and we'll see home prices skyrocket over the next year. That's the thing. Well, it's the same thing that I feel with Zillow when you go and you try to get a Zestimate, right? I mean, you're getting a Zestimate on a house that all they're doing is looking at square footage and what the other houses around you with the square footage sold for. They have no idea what your view is, what your finishes are, nothing. And they're trying to give you a value. It just doesn't make any sense.
Completely agree.
You know? But it is interesting to see kind of how they flip-flop, and it's very funny. I mean, I feel like they kind of back themselves into a hole sometimes. And
yeah,
then
I don't mean who knows what data, like who knows how much they factor in forecasting unemployment, because we could do the same thing in the West Valley, right? We have all the construction, we have the semiconductor, we have all the high paying jobs come in, but it's like they don't necessarily know when are those people hiring, when's their start date. We know it's coming. We just don't know how fast and over how many years those jobs are coming to fruition.
What's this? It's the same thing that I talk to people about when, it's where do you want to be? And if they tell me they want new construction, I'll often talk to them about the North Peoria area, just because my belief is that North Peoria area is going to explode.
Yeah.
With all with TSMC and all the ancillary businesses that are coming and that are already there, and the hiring. I mean, just developers are fighting over land out there to try to build new developments so that for the housing that they're going to need out there. I mean, I just think that's going to explode.
West Valley is, and I was actually talking to a guy at my son's high school that what he does is he builds or he designs, the mega storage warehouses. And what's interesting is, a lot of products actually come into that Long Beach pier. And really, a truck driver can only drive so many hours in a day without having to take a break. So he was saying there's one area, I think it's called Inland Empire, where there's all these massive warehouses. And so now that area has kind of been filling up, that area off the 303, that's the next spot. And if you drive, like my son had a football game at Shadow Ridge High School, which is in Surprise, which is by a luxury development called Sterling Grove.
That's a nice place.
It's really nice. But when you go up to 303, you feel like you're driving in Dallas, where there's nothing, and then boom, you'll see what looks like it's an Amazon center or something, but it's just these mega facilities, these warehouses everywhere. And one of the realtors that works out there was telling me, he's like, we have a lot of people in California that are super interested in moving into these Sterling Grove communities. These houses are like, they're not custom, they're like Toll Brothers, and then they're like $1.5 million.
Right.
And to think that luxury homes are going in that far out, I would have never believed you 10 years ago. But
I remember Tina talking about Peoria. This was, I think, last year, and she said Peoria all of a sudden is the homes out there. She's like, we're seeing more and more $1 million home sales out in the Peoria area than we ever have before.
It makes sense. And a lot of the jobs that are going in are those PhD level jobs, these higher level, taking higher education as well.
Yeah. So Jim says they're not taking into account all the surrounding factors. This is one of the many reasons you need a local realtor to help you. No, I am not a realtor. I just love mine. Thank you, Jim.
Yeah, word. And things that Zillow is not factoring in, like the guy was telling me about, like, you have to be cognizant, like the water situation out there. Like he told me a story about an engineer that made millions of dollars by purchasing a small area of land that happened to control the water west of that spot.
Oh, wow.
He figured it out, bought it, and then just flipped it. Like, yes, there's a lot of factors you have to consider, like understanding truly what your trends are, because Zillow doesn't necessarily get it right. I mean, if you look at the Zestimate tool, they have a hidden little link, the Zestimate accuracy tool, and you might be surprised to know how inaccurate Zillow often is, because what's the joke about Zillow can't see your kitchen?
No.
Right? They don't know exactly what's in your house. They know the basics. They know the basic parameters.
They don't know if your house smells like cat.
Correct. They don't know how many cats are living there for sure.
Yeah, no, I mean, I will show people that little hidden secret of Zillow. I'm like, let me just show you something. Zillow has it here, but you got to dig for it. About where you can find their actual grading system to show you how accurate their estimates are. And people are always like, I had no idea. I'm like, they can't. You can't. I mean, there's certain areas that I know so well because I've been in so many, and it's where I live. It's right where I am, and it's where I practiced real estate for over 20 some years. And it's like I can get the phone call from somebody, and they can say, "Hey, how much is my house worth?" And I know what floor plan they're in. I know which direction their house faces, so I know what they're looking at. I know some of the things. I can talk to them about what their finishes are, and I still say, "Here's a range." Because I don't know what your finishes look like. I don't know what your house looks like. I don't know what your house smells like. Sorry, but that's a big factor. And until I step foot into that house, I cannot give you an accurate assessment of what your house is really worth. It's impossible.
No, it is impossible. And even that's why even when we have an appraiser go out, someone like you could look at it and you could come up with a value, and another appraiser could come in and they come up with a different value because there are so many variables.
Right. No, it's crazy. I mean, and literally what happens most of the time, unless we're in a really crazy market, is that the appraisal comes in dead on what the contract is. And it's funny because my clients, the buyers and or sellers, will always say to me, "Oh, that's convenient." And I'm like, "Well, look, the reality is the appraiser is trying to justify the value. So unless it's skewed so strangely, or off one way or the other, I'm not surprised when it comes in directly on the value. Ever.
Yeah. I mean, there's certain guys. I mean, I think there's a particular group that you and I both love that we feel like they do a great job. But not all appraisers are created the same.
No, not at all. Not at all. All right, let's jump over to this article because this is interesting. And I'm just going to say this too. I posted a poll on my community tab in YouTube, and if you haven't voted, go vote because we're going to go over that at the end of this. Because I'm interested. I've been watching it today. I'm interested to see what you guys say. So this article says 17% of Americans are delaying a major purchase like a home or car due to government shutdown. 65% are undeterred. It said
that was a pretty big number. Yeah.
I know. Well, and I mean, you can't blame people, I don't think, for, proceeding with caution. But so here's a question. I'm going to take this down. So here's a question for you. Are you seeing any delays? Because that was a big thing. Like what is going to be affected? Are you seeing any delays? Because it's really only like FHA.
Yeah.
Government loans, that kind of thing.
Loans,
yeah.
Government loans are an issue. There's a lot of things that are scary. Like my title rep, her husband is an air controller at K. Her husband is an air traffic controller at Phoenix. And only 3 of the 9 people that are supposed to work showed up day before yesterday.
Oh, wow.
I dropped my wife off at the airport. Like, okay, like it kind of feels a little scary. Like, okay,
right.
Is your flight on time? Are there people that are actually watching, making sure planes don't crash into each other?
Right.
And these poor people are mandatory, even though they're not getting paid, which is just absolutely horrible. U.S. military. I mean, there's so many people. Obviously, like 750,000 jobs or something like that. It's crazy, but I think in terms of lending, 2 components. One is the government loans. That's going to be an issue, and 2 is that we're not getting all of the data that we need to really track what should be going on in the economy. Like the Bureau of Labor Statistics was supposed to put out a really important
jobs report
that we didn't get. They are going to figure out a way to put out a CPI report next week. And the reason they're doing it is because it's an important calculation for calculating Social Security. I think that's the only reason they're doing it. But yeah, it's really important. And as mortgage professionals, we're bummed, obviously, for 2 reasons. One is people being out of work and not getting paid. But 2 is we need those data points because what we really believe, everything else is showing us, the ADP reports, the quits rate, all those things are suggesting a weak labor market. And really that's what we're watching, because a weak labor market is going to mean lower rates, more buying power. We're going to get to that. We could get to that 6% number with a prolonged shutdown. We're like day 10 right now. This thing goes 3 weeks, 4 weeks. Like, what are we looking at here? What's the fallout from this?
Right. Yeah. I mean, I don't like that people aren't getting paid. That I feel for them.
No, it
For sure.
sucks. I mean, it really sucks. But yeah, I think we will see some interruptions for sure in lending, but so many other things.
Yeah. So, okay. So this article says some Americans are changing plans because they're directly impacted by the shutdown, and others are wary of making a big purchase because of economic uncertainty. But most are moving forward with purchases. Roughly 1 in 6, or 17% of Americans, are delaying major purchases like a home or car because of the federal government shutdown, according to a new Redfin survey. Another 7% are canceling plans for a major purchase altogether. The majority of Americans, 65%, said the government shutdown has no impact on their purchasing plans. So this is interesting. No impact. I already made a major purchase sooner than expected. 8% says I will make a major purchase sooner than expected. I'm delaying a major purchase. I am canceling my plans. So according to a Redfin Commission survey conducted on October 3rd of 2025, the National Representative Survey was fielded to 1,005 U.S. residents. The combined results have a credibility interval of, this is very detailed, but that does not seem like a big data set to me. I got to be honest with you, 1,005.
Yeah.
That seems like a very small data set to me, but that's just me. So it says the U.S. government partially shut down on October 1st after lawmakers were unable to agree on a budget. That means that pay has been suspended for roughly 2 million federal workers, 750,000 furloughed, and the rest expected to work without compensation, though they are typically entitled to back pay once an agreement is reached. It's worth noting that the White House is considering not paying furloughed employees for the time they didn't work during the shutdown, according to reports. Millions of other Americans who technically work for a private company also go without pay during a shutdown because their projects rely on federal grants or contracts. While the length of the shutdown is unknown, it's likely the government will reopen by mid-October. Not sure why they think that, but I mean, I hope they do, but I've not heard any whispers of that. It says some people are canceling or delaying big purchases because they're directly impacted by the government shutdown, i.e., they're a federal government employee or contractor who is not currently getting paid, and they may be worried about getting laid off. But most Americans aren't in that position. People whose incomes aren't directly dependent on the federal government's budget may be rethinking a major purchase because the shutdown is one more in a long line of events making Americans feel unstable about their finances. I'm going to skip this part. So the government shutdown doesn't just stop paychecks for some federal employees. It shakes the financial confidence of Americans. People across the country are taking in the news and thinking, we faced inflation, tariff, job loss, and volatile stock markets, and now government shutdown. What's next? It's understandable that some people are reconsidering buying a home or a car when the economy feels uncertain. Although it's technically a buyer's market, it's a tough time to buy a home, even putting economic uncertainty aside. Mortgage rates have come down from their peak, but are still double pandemic era lows, and home sale prices remain stubbornly high despite slow sales. Again, I caution people with that double pandemic era lows because we're never going to see those again.
No.
We're just never going to see them again. So that it's in the rearview mirror. Like you can't look back on that. You have to look forward and go, okay, can I afford this? Because it's not going to, if you're sitting there waiting, like I'm going to wait till it gets to 3 or 4%, you're never going to buy a house.
Yeah. And Tina always talks about the word uncertainty. And I feel that uncertainty breeds opportunity. And I think the best example of that would have been if you and I were having this conversation in April of, what would that be? April of 20, right? Where everyone's like, oh, what's going to happen with this virus and what's going to go on? But there are people that needed to sell their home, and imagine the uncertainty, right? But it's fluctuating wildly, but maybe they were at like 4%, something like that. I mean, I would say that uncertainty breeds opportunity a lot of times. And I kind of feel like that's where we're at right now because of government shutdown, worried about tariff inflation, worried about jobs numbers, all these things. And yeah, we're worried about rates, but again, a rate is temporary, right? And even if you're at a 6.25 rate, 6.375 rate today, which, you know, is not bad historically speaking, right? And then we get down to maybe 5.875, and all of a sudden these fin sitters are going, uncertainty is going to become certainty.
Right. Well, and then they're all going to be kicking themselves because why didn't I buy sooner? Because now the prices have gone up a little bit. That's what I see.
Yeah, and
the other thing to just
the
other thing to just think about too, right? We have had government shutdowns before that have lasted longer than this.
Yeah, we have.
So
we have, and it's just a you know, a contest nobody wins.
No.
So hopefully they can get their shit together with us up.
Right.
So they can get
something together. So it says the market is a bit slow, partly because it's so expensive to buy a home, and partly because people are feeling uneasy politically and economically. People are pressing pause on their house hunts because they're uncertain about their jobs. Matt, there's your word. The stock market, tariffs, and where the economy is going in the next several months or years. It's worth emphasizing that for most Americans, the government shutdown has no impact on their timeline for making a major purchase. Amid the uncertainty, many people have stable jobs and or savings and investments and feel secure buying something like a house or a car. Many other people simply don't feel the shutdown affects them. And I think that there's a majority of people that feel that way. And again, I've been asked by some people feeling like, you know, this market, the prices are too high, that there's no way people can buy. And I tell people, I'm like, I have a lot of buyers right now and they are ready to go. Like I find them a house, they are writing a contract today. There's nothing stopping them. And some people are really shocked by that. They're like, who is buying a house? Like there's a lot of people out there buying houses right now.
Tons. I mean, the interesting thing is if you look at what typically happens during a recession is that home values typically increase
and rates go down.
And although there are people that are negatively impacted, you have lots of those people calling you saying, we're good. Just looking for the right deal, just looking for the right opportunity. So it is strange and it doesn't feel like it makes sense in a lot of ways, but it's true. Is it anything recessionary? And then, does anything bad for the economy usually bodes well for rates, right? You know, except for like inflation's obviously that's our kryptonite, but weak labor, weak GDP, low quits rates, all those things, those all bode well for mortgage rates. And that's going to definitely, keep the market moving.
Well, it's the same thing, like to your point of like, I know it doesn't make sense or it's counterintuitive. It's the same thing when when the Fed lowers the federal funds rate and the mortgage rate goes up. Everyone's like, wait a second, what just happened?
It's all posturing. It's all baked in based upon guesses. It's the same way a stock works. It's exactly the same. So now they're saying, okay, there's going to be 2 more rate cuts, right? But if a Fed governor just, had too much at happy hour and he starts spouting off about how he thinks that we shouldn't be doing that, or another one says we should probably do deeper cut, those are going to move the markets. Even though there's been no vote, it's all based on speculation, right? We think this is going to happen, so therefore the markets act accordingly.
Right. Well, and I mean, it's all, again, to your point. It just, everybody just keeps moving the ball.
Yeah, 100%. 100%. Yeah, the last one was brutal because Powell made some comments that were quite hawkish, after the meeting. So therefore, I watched it. I watch mortgage-backed securities every day. I was like, okay, we're up 10 ticks, we're going great. And then he opened his mouth and boom, we're down 20. Like it was a quick 30-point swing in like a matter of an hour and a half.
And that's the thing people don't realize, like that's how fast it moves.
It does. And that's the thing, like when I'm talking to people who want to refinance, I'm like, look, let's establish a strike rate and say, okay, let's get our applications, get everything done. Because if we do see an opportunity, it may last 48 hours sometimes. Like it moves that fast. And same for purchases. Like let's come up with an area let's be aware of where we want to be and let's watch it. And that's my job, is to be on it for you, so we can make sure that we're trying to time it as best we can. No one can time it at the absolute perfect number. Well, almost never. It did kind of happen for me once, I think, last month, but it doesn't happen very often.
Yeah. Well, our market is definitely, I think, two different markets for sure. And it's not, I agree with what that first article that we looked at is saying. Like the East Coast seems to be moving more quickly. But I have a hard time with it. We have no demand here because I see the demand. The problem is that the housing that we have for that demand to buy, they don't want to buy. That's what I see as the problem.
Yeah.
And here's the thing: would they buy them? Sure, they would buy them, but not at the prices that that the sellers want to sell them for.
No, they don't. But I mean, again, it's like, one that you just put under contract. I mean, came on did it hit the market on a Thursday or
Friday?
Wednesday? It hit the market on a Friday, and it had how many offers?
4.
Yeah, I mean, it's wild.
And we had to beat out 4 offers, and we did. But I mean, it was. I mean, I knew the minute that I walked into the house, I was like, we have to move on this fast, and we have to be really aggressive.
Your gut was spot on, and you're like, and another realtor was there, right, when you were looking at it.
Well, another person was in a house that I saw the day before. It was the client, and he saw me. And he was like, "You again?" And I was like, "Oh boy, here we go."
Whoa. Yeah, I'm just following you around.
Right.
I know.
Right. Because I mean, for some of the good houses, they go fast. They go fast, and it's not even that they're perfect. We just did the inspection on that house today, and can I tell you that it's perfect? No, it's not. Is it pretty good? It's pretty good.
Okay.
But it still has some issues.
We'll take that.
It still has issues, and that roof. I tell you what.
Oh, please,
people, please go get your roofs.
Please, yeah.
The roofs. I feel like I could make a meme or something about these roofs because they are like the bane of my existence right now. Even the inspector said, he's like, man, every one that I do that I've done for you lately, he's like, the last 6 that I've done for you, these roofs are just bad. I'm like, I know. And
it's wild. Well, I mean, we're going to find out this weekend again too, because it's going to rain. It sounds like all week.
I know. It's crazy. But I think every city has their saying, right? When something happens, they're like, well, and ours is when it rains, everybody says, well, we need the rain.
Yeah. But I mean, imagine we're in Arizona. Can you imagine doing this for a living in Boston?
No.
This I couldn't even imagine in 1927. I mean, come on.
Yeah. Well, I sold a house in the historic district in Phoenix, and that's a different ballgame. Because it's like, oh my gosh, this wiring is.
I was gonna say you're opening up a whole nother can of worms, man. You're like, yeah. Okay, by the way, we're gonna have to knock your house down to pull up all the copper wires.
Right. It was a different ballgame, but yeah, it was crazy.
A lot of ambitious flippers get humbled very quickly when they buy those houses in the Central Corridor.
Yes, because they just don't know.
And you have to be prepared for that $30,000 expense.
Yeah.
Down the line, and you can run the cameras down there, and you can kind of get an idea, and you do a great job with your team of inspectors to uncover everything you can.
Yeah.
There's some things you can only you can try to be prepared for it, but there's just no guarantees.
I was just having that conversation with another buyer of mine because he's really struggling, kind of just pulling the trigger. He's like, well, I'm just worried that about this. And, I'm worried. What if I didn't think about this? And what if I didn't think about that? And I said, here's the thing that I can tell you when you're buying a piece of real estate. One, it's inherently risky. We can only do the best that we can in getting everything inspected and everything looked at and know, what we can uncover, to the best of our ability. But then you have to just know in your head, you've done everything that you possibly can. And when you move in, something is going to happen. Something's going to break. Something is going to pop up that you didn't know about. And there will have been no way for us to know about it. So you just have to know that going in.
And then know that if you buy something and you will live in it, you will keep it. Buy it or live in it for 5 years, you will probably be happy.
Yeah. Agreed. And these people that, like if I buy it, if I need to move in 2 years, you're not going to make any money.
No.
Not going to make any money.
I'm seeing it right now.
Yeah, I am too. And it's funny because some of the houses that are on the market, I feel like that with the higher prices, and not all of them, because I look back in the tax records to see like when did they buy the house, all of that, do your research in that. But there are some houses, a lot of them seem to be like they bought in the last 2 to 3 years. They're wanting to make some sort of a profit, and the reality is they're just not going to. Not unless they've done something massive to the house and the house wasn't that way when they bought it. But because there was one around the corner for me that happened. They bought it 2 years ago and did a massive remodel. Now they're walking away with a big chunk of money or a big chunk of profit because they touched every surface in the house. They knocked down walls. They've got new roof, new windows, new flooring, new doors, everything, new cabinetry, everything is new. So that is a different animal,
Yeah, and they probably spent a pretty penny to do so.
Right. So, are they walking away with a profit? They are, but is it as big as you think from what the purchase price was to the sales price? No, you got to think about all the money that they spent because they did it for themselves as well. Right. And so they didn't like do anything cheaply.
Correct.
So, all right, let's look at this. I'm going to refresh this one time because I think we've had more. We're going to look at this question that we threw out there and see. It says, why do you think the housing market is splitting in two? High interest rates are freezing buyers. That was 7%. Economic fears are keeping people on the sidelines. That's the biggest one at 67%. Cash buyers and investors are driving up prices. That's 13%. It's just a normal market cycle. Nothing weird here. I would have a tendency. I think that the fears are definitely in people's heads. And I think that's something that is slowing people down. But I do feel like, as crazy as it sounds, that we're in more of a normal market. It can be kind of boring. A normal market's boring. And after what we just came out of, people are not used to boring.
But this market could use the certainty of a stable market. And then that will help things move.
Right.
Help things move. Even we saw in Phoenix and when we had kind of a lull in rates, right? Where we were like right at that like 6.5 number. We started to see a little bit of uptick in activity because we stayed there for like 3 weeks.
Mm-hmm.
So hopefully the government shutdown will stop, and then hopefully we can land in a nice, consistent area.
I know it. It's crazy. Well, everybody, have a great weekend. Thanks, Matt, for joining me today.
Thanks for having me.
Of course. Always good to have these conversations because the market's crazy and it moves every day. That's why we stay on top of it. So I appreciate you all. And we'll see you next week. Thank you.